Did COSM find the bottom in today's session? Well, let's go ahead and find out in this video. What is up, you guys? Thank you so much for stopping by once again on this flying Wednesday night. This is ARCa coming at you with a COSM technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa. With that said, let's go ahead and dive right into the charts. So we are looking at COSM on the bi-hourly chart right here, and we're going to start off the immediate short-term time frame with the ARC-Series Crypstex indicators. First of all, this is the indicator that we're going to be looking at for the immediate short term. This is called DBSI. So the DBSI indicator is a statistical indicator that takes a metric based on every single candle print, thus giving us an average mean for us to evaluate. So in this case, we can see that in the immediate short-term bi-hourly chart, the bulls are absolutely in control and with a score of 81% versus the bears at 19%. And a couple key things to notice from this indicator here. As you can see, this tiny little blue circle down here actually means or gives a buy signal. Okay, so we do have a buy signal still honored by the DBSI indicator, and if you can notice here, this yellow moving average represents the 13-day exponential moving average, of which we are now above. So whenever we're above this 13-day exponential moving average, DBSI considers it to be bullish and considers it to be an upside continuation as well. But we do have to watch out with whatever other signals we have, as we will continue validating as we move on through this video. Actually, let me go ahead and change the size of the font on the right hand side here so that it can be a little easier to see for the people driving and for the people who are just a little hard at seeing, right? Okay, so now let's take a look at the ARC Enhanced MACD, which, by the way, these indicators are live now. They're available to you. Make sure to send me a DM on Twitter or Discord, and we can go over the details as to how to acquire these indicators, okay? So now, the ARC Enhanced MACD has printed a buy signal as well, and it has printed the buy signal very much in accordance with the DBSI buy signal. So things are looking pretty good in the bi-hourly chart. Okay, so let's go ahead and move on now to the next chart and see what we have. Okay, so this is the daily chart, and this is the broadening descending wedge that we've been looking at for quite some time now. We did mention that the likelihood of coming back to test our newly converted resistance, which is the top trend line of the wedge itself, as a support, it's very likely. So in this case, I did mention a couple times that we could potentially face a downside to look at the potentials of a 19 to 22 cent range, or 18.75, or let's just call it 18 cents to about 22 cents. I may have been off a little bit, maybe by a cent, because I'm starting to look at some bullish activity here, and some of this activity looks like it's not suggesting a continuation back or a pullback into testing that resistance conversion into support one more time. I don't think that may happen anymore, but we'll validate that as we move along. But the reason why I'm saying this is because the candle print that we got from today, if you can look at the metrics right at the top left of the screen right here, I'll read them to you no matter what, but the low of this candle here is 23.80. So that's what I meant by being off by potentially about a cent. So it did use the 2 fib that we were looking at yesterday at 22.89, just shy of it before a bounce to the upside, and giving us another daily candle confirmation that it is a valid form of support. What I'm talking about support is the newly converted resistance into support of the top trend line of the wedge. Okay, so in this case, we are closing the candle today at 32 cents, almost on the dot on the daily. This is not including the aftermarket or the after hours trading. Okay, so and we are currently facing some resistance from the 1.618 at 34.65. Now the area that we're in right now, this little boxed area that I'm looking at between the 36.37 and 30.91. That area is actually a previously closed gap that I have kept in here for future play. As if you're a regular listener or if you're a regular viewer, you know that I keep some of the relevant gaps even after they've been closed for future play. So in this case, you can see on this candle here, the wick low landing at 36.21, and which was dated on August 19th. September 19th, and now the other candle was dated on September 22nd, the wick high of that being 30.99. So that is the range that we have as far as a gap, and we're currently using it as play again. Okay, so I think, I mean, this is very discretionary of me. I have not seen the rest of the charts just yet, which I'm sure some of you are familiar with. I tend to make the magic happen as we move along. Okay, so today's activity hasn't been looked at by me just yet. So let's move on to the next chart. But thus far, it looks like we may have potentially found that bottom. Okay, so let's see what we have here. So in the next chart is the head and shoulders chart that we've been looking at for some time now. And from that move, it looks like we've completed, let's just take a quick metric. From actually, yeah, we'll take it from here. Hold on just a sec, you guys. I'll give you a metric now. We completed about 44.44% of the price objective from the head and shoulders. Objective is what I'm talking about. So that objective actually led us to believe that we could touch the 1944 cents area, which actually has confluence with the 2-spot 618 at 1875, which is how we acquired that bottom target. Now, this massive candle that we printed from actually at the very early session today it topped out at a high of 33.50, and now since we're looking at a 4-hour chart, we can actually see the closure at 33.27, and the high of it was 33.90. Okay, so there could potentially be one more pullback based on the candle analysis here, and the pullback can very likely be very short-lived. You should know this. So the pullback could potentially be to 29.86, which has confluence with the 1-spot 272 at 2900. So this pullback is likely to happen in the early session, maybe even the early pre-market. So. And the reason why I can say this is it's simply because of the very last print that the candle that COSM printed here is a shooting star doji. So this type of candle usually signals a potential pullback and followed by a relief. So what you're looking at here is not enough of a test of the newly converted resistance into support of particularly the descending channel here. So we still need to validate that support before a continuation onto the upside. And basing this on just some basic candle analysis, it's suggesting that there's a potential short-term pullback. And in that pullback, with a closure of a 4-hour candle, I would say a minimum bi-hourly to 4-hour candle closure above the 2982 zone, which is the support now of the descending channel. So upon a closure of that candle, this can actually be a pretty good area for opening of long positions. Please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as a form of entertainment. Please do your own DD and we will be just fine. Okay, so yeah, I'm looking at it based on just this. This is very discretionary of me to tell you like this, but I've seen this pattern happen several times, and it looks like there is a potential pullback coming in the immediate short term. Let's move on to the next chart, as this is very important for us to talk about. So what we're looking at here, new viewers, new listeners, this is volatility represented by this indicator BBWP. Volatility is direction neutral. We pair it with a stochastic momentum indicator, which in this case is proprietary to TradingView software, which, by the way, there's a link in the description below if you would like to start an account with TradingView software. It actually does help me very much so. So please, thank you, consider that. So what we're looking at here is, okay, let me just zoom in just a little bit so that we can all be in the same page. This spectrum line is the volatility component of the BBWP indicator. The pink line is the moving average. So usually usually when we have a rejection of a contraction phase, contraction meaning that we're going towards the downside, and now we've corrected and started an expansion phase, and we've already crossed the moving average and have entered into a critical volatility zone, which I consider to be anything above this trend line here, colored red where my cursor is, above the 90%. So anything within the 90 percentile is critical volatility. When we start printing these repeated critical volatility measures, an upside move or a downside move is very likely. So for us to gain that bias as to which way we may go is why we pair it with the momentum-based indicator, the stochastic momentum. So the momentum oscillator in this case is making a very curious move here. So we have drastically corrected the downside pivot. So now we're actually starting to pivot on the moving averages from actually one moving average from the stochastic momentum. So this pivot is coming in very aggressively now to actually correct. So what we do need is for the other moving average colored in yellow here to also pivot towards the upside. So as soon as we do influence the next moving average in stochastic momentum, we can definitely verify a continuation to the upside. However, one of the moving averages is still suggesting a continuation onto the downside, while the other one is still suggesting a potential correction. That is in accordance with what we're talking about within the candle analysis of the previous chart, looking at this shooting star doji at the top, potential pullback to come and test that 29.86 area to the 29 cent at the 1.272. That's looking likely now, based on what we're looking at here on particularly volatility versus momentum. Okay, so now let's move on to the last part of the analysis, which is actually going to be the RSI, as I have found something very interesting here too. Okay, so now what we're looking at here is a divergence chart. Divergences in the RSI or momentum is usually the opposition of price action versus momentum. So in this case, we are making a series of lower lows on the price action while we're making a series of lower highs on the momentum side. So now in this case, momentum represented by this indicator RSI, relative strength index. Know that the pink line is representing a 14-day moving average, which is very common to RSI setup. The purple line is representing the RSI signal. So in this case, now we have 1, 2, and 3 drives. Actually, now what makes them phantom drives is that we're going through price action in order for us to meet point A to point B. So you can see all this price action being crossed. Okay, so in this case, we're looking at bullish divergence, right? So in this case, it is a regular drive, a phantom bullish divergence, 3 to be exact. And please take a look closer at the RSI signal versus the moving average. It has since made, just barely, we have made a bullish cross above it. So this is now signaling a continuation to the upside in the 12-hour time frame, which is very much something we should keep some weight on. Okay, now let's open up a multi-pane and try to finish off this analysis. All right, so now actually, you know what? Let's go ahead and load just like we always do, the 30-minute immediate short term. And for the new viewers and new listeners, I do have a diagram here for you to take a gander at. These are the 4 zones that I would like for you to focus in on, as they are located right over here on the chart as well. Okay, so let's go ahead and just make this a little smaller and continue our analysis. Okay, so the 30-minute immediate short-term time frame is suggesting what we're talking about. An immediate short-term pullback. We can definitely use the moving average, which is pivoted towards the upside, as kind of a support before we can continue on to the upside. So this is very much in accordance to the candle analysis we were looking on in the previous chart. Okay, so now the bi-hourly chart is suggesting a continuation to the upside, and the moving average is starting to correct to the upside. Very good sign. However, I do warn you all the time that whenever we're in the shallow areas of literally whatever zone, the likelihood of being gravitated to the opposing zone is greater. Okay, so now let's look at the 6-hour. The 6-hour is starting to slow its pivot just a little bit. However, now it's reached the shallow areas of the bear weakness percentile. Usually when that happens, the gravitational pull towards the upside is a little greater. Okay, now let's look at the daily So the daily is now doing this like sideways trading type thing. Whenever we're in the shallow areas of either zones and we can't, we can't correct out of it, that usually signals some sideways trading. So meaning that until volatility starts reaching a peak or maybe FOMO, then this can actually correct. Now, just for giggles, let's look at the buy daily. Buy daily is still suggesting some downside. However, it is potentially going to use the moving average as a form of support. So yeah, what this is just telling me, after putting all the puzzle pieces together, is that there's still an upside happening, potentially after a very small pullback. And I can see the pullback happen to about, like I said, the 29.86 zone to the 1.272 at 29 cents before a continuation to the upside. So we may look at 1 or 2 days of bullish action before we can actually see some potential pullbacks on the way up. So this is going to be kind of a rocky trek. Okay, so I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, don't hesitate to reach out to me on Discord or Twitter. I'll make sure to leave those links in the description below. But with that said, I wish you a very good night, and I will catch you at the bell mañana. Adios.